Welcome to Scholar Trading. Just going to dive into NASDAQ and see how some of the stocks have been performing this week. Earnings came out for a few companies anyway, and this week coming up is going to be quite intense. I'm forecasting a lot of drops, and yeah, it's not going to be a good earnings season. The real reason I believe this is if you take a look at every quarter that has their predicted earnings for this season, even though inflation went up between 13 and 15%, which means that majority of companies pass on these issues over to their consumers, right, by raising the cost of their product. If inflation went up that much and companies are passing the buck to consumers as far as the cost, the earnings should be up 10 to 15% at least. The trouble is that the earnings are going to be reported less than they were in the same quarter of last year before inflation really started to skyrocket. So, where we're seeing this right now, you can see NASDAQ. I'm going to put that back on the daily. Uh, my original prediction, thinking that it was going to drop there. I mean, it did drop, but just not all the way down as expected. It actually went up to make a newer high, but ultimately not beating this one from August 15th. It's been hovering here, came very close, and now we're sitting at pretty much stagnation for the last, 3 weeks? I mean, ever since March 31st, it is now April 21st, so 3 weeks, yeah. It's been stagnating, slowly dropping. You could see the M pattern is starting to form on the EMA. If it shifts, it's very likely going to happen tomorrow or the day after. Very, very close. So, let's dive into some of the earnings. I believe we had Netflix earnings. It came in pretty much as expected. Same with revenue, but let me show you last year's quarter at this time. Okay, reported 3.53, reported 2.88. I do believe that the gap is just going to close, which it did on Thursday, as far as where it kind of peaked up for the day, and now it's just going to be slowly dropping back down. There's a major gap to fill, I believe, right here. About 240, 249 to 250. Apologize. Tesla, another one that came in with earnings. So this is my prediction for it. And this giant gap that happened with the previous earnings, it's about to be filled with the current one. Reported 1.07, reported 0.85. Okay, that's a year later. So Tesla is doing the opposite of every other company. Rather than increasing prices, they are cutting prices. So that is why their margin is hurt and they're reporting less. That's why it dropped 10% from Friday's close. I believe the target area is going to be between 154 to 146. I do not believe that. Well, it's hard to say. I mean, I'd be thinking that Tesla wouldn't be dropping back down to 100, but once it hits 145, that doesn't automatically mean a buy for me. I'm going to wait to see if it climbs up a decent percentage before jumping in on the long term, because I believe that's going to be the lowest point that it's going to hit for several years. Amazon. Where is Amazon going? So, there's really no gap to close on the upside. It's already been shut there. The next one is going to be at 124 to 125. However, unfortunately, it's the same predicament as we've seen with Tesla and Netflix, right? So if you take a look at the revenue for April 28th of 2022, okay, it reported for once in the negative. Like, that was a significant decrease, right? They operate at a loss that quarter. Not great, right? However, how did it look like in the last red one, right? So I don't see any negatives, not since a long, long time, right? So April 28th was operating at a negative, and July 28th, 2022, operating at a negative. Last very, very tiny incremental increase on EPS So what are we seeing right now? 0.21. So here's the situation where we're going to see. If it has a drop like this, Amazon is going to drop incredibly hard. Okay, I believe that it could be anywhere from 15 to 20% if, going back down to 85, if earnings are at all missed, like they won't even come close. Okay, even reported revenue is going to be down 20 billion estimate, right? Who knows if it could go above or below, but this is just a prediction. Amazon, as far as I see, not fantastic. Let's go back to Nasdaq. Okay, I always say that these pumps are going to happen regardless of where earnings are at. And as you can see right now, based on the last 3 weeks, Nasdaq's been stagnating. It's refusing to go higher at this point. What happens when we see consolidation for about 3 weeks? Okay, let's take a look. Let's just kind of go in the historic. Look, see, stagnation for about 2 weeks, and then it drops. Stagnation, I mean, it dropped a little bit and kept climbing, but that was on a move upwards, right? Stagnation at its peak started to drop. Kind of stagnation as it was climbing from a bottom, it went up. Okay, where else should we take a look at? Let's go before COVID. Okay, so look, it went up, stagnated a little bit, dropped, and then consolidated for about 2 months. Look, see, started climbing, hit a peak, kind of double tapped that peak, but overall stagnated for about a month, and then it dropped. Okay, where else should we take a look at? Where else do we see major consolidation? Just as another example, it climbed, stagnated for a little bit, and then slowly dropped back down. Okay, once you see this kind of stagnation for about 2 weeks, it's very, very likely, right? So that's 14, 15 days, but look, 21 days. That's kind of where we're at right now. That's what I see happening very, very soon. Because these earnings are going to be the catalyst, and it's going to drop. Nasdaq's going to drop at least 10 to 15%. Now, just remember, guys, it's all a theory, right? Whether it happens or not, that's based on my predictions. Do your own analysis as well. If you agree with mine, fantastic. If you disagree with mine, I would love to know in the comments what you see different. But like I said, right, you see the stagnation happening right here. Same idea. Okay. Anyway, let's dive into Meta. Meta is also coming out with earnings. Let's take a look. Where do we have gaps to fill? Between 152 to 167, currently sitting at 212. So pretty chunky gap to bring back down. I believe that's going to be triggered by earnings. Okay, because as you can see, it's spiked up. It's been climbing ever since. As far as the market cap for Nvidia, it's higher than Tesla's right now. So is it worth that much? I don't think so. I think the company's incredibly overvalued right now. Like a fair valuation for me would be maybe 150 to 200. But yeah, 270, 272, 271 where it's at right now, very overvalued. Okay, and as you can see, even when the graph is telling us historical moves right here, you can see the peaks that were there just broke through the 1 day, and it's very close, like it's bouncing off its resistance area there. Okay, what else? Microsoft is also going to be reporting earnings on the 25th. Okay, where do we see Microsoft right now? Let's take a look, right? Where do we have its peak on August 17th, right? Nvidia, where did we have its peak? March 28th, right? August 17th was way down here. Okay, so Microsoft, a little bit different. That line used to be a support and then resistance, so it's not relevant anymore. Okay, and neither is my channel. So, two things, right? There's a gap to fill here, but again, estimate 2.24. What was the last? 2.22. So it's kind of on par to be where it's at. That's not the worst thing. Microsoft might see a little bit of stagnation. I believe, though, it will be brought down because Meta's earnings are on the 26th as well. So we have Microsoft on the 25th and Meta on the 26th. I believe Microsoft is just going to stagnate a little bit. and Meta will bring down the majority of the NASDAQ following day. Google. Let's take a look at Google. What is going on here? So, as you can see, even on this chart, it's been reporting negative earnings. Well, surprise negative earnings, right? I mean, it's still technically in the positive. Less, less, less. Look at this. Every single quarter for the last year, 1.23, 1.21, 1.06, 1.05, and now 1.8 estimate. Judging from every single quarter, that's down 13 cents. Whoops. Oh, we don't need that. Down 13 cents. That's down 20 cents. That's down 5 cents. And that's down 5 cents. So anywhere from 20 to 5, let's average it out at 10 cents less than earnings, right? So this will come in at 98 cents. That's, when was the last time earnings came in less than $1? I mean, yeah. It hasn't been for years, right? Let's take a look. 0.49, and that's April 20th, 2020, right? Right at the peak of COVID. So, yeah, I mean, 3 years ago, it's going to be, it's going to be the worst earnings season in 3 years for Google. So, what can we expect? I mean, even if it does hit estimate or slightly beat it, which personally, I don't think that's going to happen. Even earnings is far, far less. Like estimated revenue, look, 76 billion, and they're going to be estimated at 68 right now. So that's 8 billion less in revenue per quarter, right? Apples to apples, right? Let's compare the same quarter of last year, 68 and 68. So it looks like it's on par. But again, they've cut labor. They have not increased ad revenue because, again, if inflation went up 15%, they would be charging more money for ads as well. However, everything didn't really go hand in hand with economic increases, right? So Google, even though they increased their prices, their revenue is still going to be the same before all those increases. So this is kind of why I'm predicting every single stock is going to have a big problem, especially techies. All right. Thanks for watching, everybody, and I'll see you next week.